Hello, good evening, everyone. This is Alex from MarketWise Asia. Today is the Friday, 13th of May 2022. So good to see everyone once again. So if you guys can hear me loud and clear, please say a hi to me in the comments. And if you are on YouTube as well, good evening. All right. And do subscribe to our YouTube channel also. So say a hi to me, give me a like, give me a share, subscribe to our channel. Okay. So yeah, recently, not recently, yeah, these few days, the weather, it is very, very hot. Okay. I was perspiring, just now I was doing some, household chore before I go for this, Facebook Live and this YouTube broadcast. I was perspiring. Okay. So let me take a look at the comments right now. Hello, Mary. Hello, Han Ho, Vico, Amanda, SP Wei Lun, CJ, okay, Divine Lab, okay, you're from YouTube, okay, LW, YM, Imran, Simon, Pauling, okay, Tiger Beer, Mark, David Gunn, Nelson, summertime is back, okay, Bo Kui. All right, yes, today I can see hello, Alex and Jay. Yes, today we have a special guest speaker because, Darius asked for Jay. Okay, so I tried to invite him. Okay, and he's okay with that. And also, you shall see this stock god. Okay, in action later. So my session, I will start first. Just give me about half an hour or lesser than that, and the rest of the time I will pass to Jay, because if I don't give him enough time, he can talk until 3 a.m. in the morning. So it is best that let him speak now. Okay, I will take a break. I'll take a break. All right, so let me go to the my screen share right now. Okay, this is the Telegram, not this. For now, I'll go to this. Okay, this first. Let me zoom in first. Oh, by the way, right now we have about 182 people. I think it's spread across Facebook and also YouTube as well. And if you're just joining me, right, give me a like, share, or comment. Do engage with me. Let Facebook algo and also YouTube algo knows that you like our content and want to see more of us in the future. Okay, so if you don't engage with me, Facebook will think that you don't like our content, and in the future will start showing you lesser and lesser of our content for YouTube as well. Also for YouTube, do subscribe to our channel. For Facebook, liking is free, doesn't cost you money, so just give us a like and share as well. So as usual, disclaimer first, whatever I share today is just for education and informational purpose. It is not a recommendation to tell you what to buy and what to sell. So Alex is always wrong, so please don't copy me. So please do your own due diligence. My opinion doesn't mean that I'm right. So is that okay? If everything is okay, just give me a like, just give me a thumbs up on Facebook. All right. So today, right, if you have seen the YouTube description, right, or the Facebook description, it is how to navigate this bear market and how to protect yourself against more downside risk. And for those who just joined this, right, once again, we have the guest speaker, right, Jay from Swing Trading founder. So he will share with you later. And for those who have been following us, you shouldn't be unfamiliar with him. You should be in fact very familiar with him. Okay, so he'll share with you how to navigate this bear market or the Luna saga, and what does it mean for the overall crypto market, and how much further are we from the stock market bottom. Okay, so for me, okay, I will share with you one signal that you should watch out for and why it could be an important turning point for the stock market. Okay, but before I go into that, right, so I mentioned in my Telegram, okay, and also Facebook, right, some of you, I'm not sure who are you, okay, you might be facing some drawdown. It could be just a little bit drawdown percentage, or it could be a huge drawdown. Okay, I don't know, but I think it is okay to not feel okay. I think it is okay. Okay, as I mentioned in my Telegram chat over here, which I shared, I think yesterday. All right, so if you are facing huge drawdown from the market sell-off recently, right, be it equities or cryptos, right, especially like, for example, if you are invested into Luna, for example, you're not okay. Okay, if you are invested a huge amount, right? So I experienced that before. It is not a good feeling, I know. Okay, but as I mentioned, right, the money can be earned back. All right, nothing is more important than your health and your mental well-being. The reason why I say that it is very simple, okay, because recently my family members, there are two health scare. So I won't tell you what is it, doesn't matter. So essentially, people that are very important to me are having some health scare. Okay, so at that point in time, you just want your family, your loved one to be healthy. Okay, you don't really think of the money anymore. Again, I am not saying that money is not important. Money is important. Okay, but the issue is when there's health issue, you really want yourself or your family members to be really just healthy. The rest you can put it aside as long as enough to spend. I think that's okay. Really. I'm not sure how many of you agree with me. If you agree with me, okay, just type yes in the comments and just let some people who might need to know that it is okay to not feel okay. Okay, you need to find somebody to talk to. Just find somebody to talk to. Okay, you can always earn the money back. Okay, yeah, health is really the most important. Okay, all right. So let's dive into this right now. All right. So yeah, right now we have about 273 people. So as I mentioned, right, the signal that you should watch out for, all right, is none. There are in fact a few signal. Okay, let me try to zoom like that. Okay, there are a few signal, but the main signal that I am watching out is this VVIX over VIX. All right, it is this. If you have been watching my Facebook Live, you should heard of it before. All right, for those who are new, doesn't matter. I'll just roughly go through it. But for those right who have been in the market for some time, right, you should know about VIX. Right, VIX is the volatility index, or people also call it the fear index. Okay, basically it measure the volatility of the S&P index options, right, the implied volatility, which is about 30 days to expiry. Okay, and this, all right, this VVIX, okay, just a recap, is in fact, it measures the volatility of the volatility. Okay, all right, so it measures, okay, MEASUR, it measure VIX, so it measure the VIX, so it's measure the volatility of volatility. So it's a derivative now. Okay, for those who still a bit confused, doesn't matter. So the one that I'm using is actually the ratio VVIX and also VIX. In a way, it can tell you an extreme level like overbought or oversold. Okay, can all right. Oh yeah, talking about that, the reason why I'm talking about that is that because, okay, sorry about jumping around, because sometimes I lost in my thoughts. So the reason why I say that it is because I say today, this afternoon at 2:03 p.m., I said that the market, okay, we might have bottom or very close to a bottom. Okay, so let's see whether this post will age well in 1 month's time. So again, disclaimer, I'm always wrong. This is just my personal view. Please treat it with just a pinch of salt. Okay, yeah, so the reason why I say that is because of the VVIX over VIX and also a few of the other market internals indicators that shows kind of an extreme oversold level, that kind. All right. So before I talk about that, right? So the context of bottom out. So you must be clear first. So what do I mean by bottom out? Okay. So to be very honest, whether this will be the absolute bottom or not, okay, I have no idea. But I think, just my personal opinion, I think it could be the bottom. Okay. The reason why I say that it is because bottom, okay, the context on bottom, okay, which means bottom up means right, once we hit, okay, this is the S&P 500 futures, right? So you can see that since the start of January, price has been coming down, right? So this is a kind of a downtrend. Everybody can see it is down, very obvious, right? When I say bottom out, which means that maybe until the end of the year, okay, it could be the absolute low. So which means that within from now starting onwards until the end of the year, it could be the low. The low meaning that this is the absolute low over here. Price could just go up, but then do some retracement, ping pong, hit higher, come down a little bit, ping pong, and go higher. Okay, but this will be the low. Of course, price can do another scenario, okay, which is something like that. All right, come down, okay, pull back a little bit, goes a little bit, and then come down, okay, and retest the low again over here, break the low slightly a bit, okay, and then go back up again. And after that, we will not see this low anymore, okay? So this is what I call bottom out. So again, I know right now, some of you, from what I sense, some are still very bearish, some are still bullish or whatever it is, but can I just have a show of hand, right? How many of you are actually bullish now? If you are bullish, just type bull. If you are bearish, just type bear in the market. I see Chris Long in the comments. Okay, this is the crypto god. Okay, J is the stock god. I am nothing. Okay. All right. So how many will actually bull? Don't be affected by me, by the way. When I say bottom up, don't be affected by me. Okay, my opinion can be wrong one. So just let me know your opinion. Okay, let me take a look at the comments. So bear, boo, boo, bear. Still quite a number of you that is bad. But I can see there are little bit more bull coming up, 50-50, bear, right? Okay. So in fact, this is exactly what I want to see. Okay. I don't want all of you have the same opinion as me. If everyone think the same as me that the market is going to go up, then I think there's a 90% chance that I'm wrong. So this is exactly what I want to see. So which means that the views are still divided. Some are still in the bear camp and some are still in the bull camp. All right. So so bottom up, but of course market can do like that. After that, come down right now, rebound, and then come back down again, another leg up. All right, it can do this. Okay, but one thing I want to share with you is that this VVIX over VIX. So I share with you again VVIX over VIX. This is the ratio, as I mentioned over here. This is the ratio VIX VIX. So if you are new here, very simple. You can just go to trading view, all right, VVIX, all right, you just slash the ratio lah, then you just find the VIX, okay, and you can see this, all right, then you will get the ratio already, okay, everything okay? If okay, just type okay in the comments. Right now we have about 387 people in the room right now, okay? So once again, before I go into that, as there are more and more people coming in, okay, as I mentioned, right, some of the things I only share in the Telegram channel. For example, my very impromptu opinion that the market has bottomed out. Okay, I share in Telegram, not on Facebook, not on anywhere else, not in email, because sometimes I don't send so many emails in a day. So the best thing is, right, you subscribe to our Telegram channel. Okay, right now we have about 5,001 people in the room right now. So in chart, right, so what's the meaning of this ratio, right? Essentially, is another way to help you to check the market internals, whether it is at an extreme overbought, oversold level also, okay, can? All right, so you can, I already have a template. So let me just share with you my template over here. Okay, this is the template. On the top, you will see, right, it is the VVIX ratio, okay, VVIX over VIX. At the bottom over here, right, this is the S&P 500. I put SPY lah, okay, the SPY ETF, simple, okay, and so prior to that, I think it is just before the start of the year, right, I mentioned that there is a divergence, okay, which means that even though the S&P 500 or the stock market, the index is actually going up, all right, but the VVIX ratio, it is actually coming down. So that's at that point in time and say that the market could be heading for some drawdown, correction, and such. But I didn't expect the correction to be so steep. Okay, so in fact, yeah, so this is quite accurate indicator at that point in time, which I did mention in my Facebook Live. Okay, so now, all right, we are facing another kind of a divergence also. So I can see over here, right, the market, the S&P 500 is actually making a new low over here. Can you see over here, right? It is making a new low from March until May. It is forming a new low. But okay, the VDX ratio, it is not forming a new low anymore. Can you see over there? It is not forming a new low anymore. Okay, low, not forming low. In fact, it is just back to the same level in March. It tells me that the market, something is not that right already. It's not that fearful. People are not that fearful anymore. And the VDX ratio, you can classify, overbought and oversold region using the red line as I mentioned over here, like over seven, the reading 7 and 8, it is kind of complacent, which means that the market, it is doing well. That's why the VDX ratio is at top. When there's fear, the VDX ratio will be at the bottom. So 5, reading 4, reading 3, kind of a fear level. So right now we are at the 3 level, but we are not going down anymore. So this is why at the point in time, I think that, hey, the market could be turning, okay? Ken, if you understand what I'm trying to say, just type VVIX in the comments, okay? And if we just simply look at the VIX, right? Simply look at the VIX, okay? Like this, okay? Simply look at the VIX. All right, so even though the market, right, dropped a lot, right? In fact, it didn't really go back and test the 35 reading level again. So, even though it seems that on the street there's a lot of fear, but VIX, what the pros are doing is actually telling me it is not that fearful. So something is also not right. On the street, it's like fearful, but on the VIX itself, it is not that fearful. So I expect, when there's a sharp sell-off, I expect price, like for example, do the 2020 COVID sell-off, extreme fear, price, the VIX will just spike up to 40 plus level and such. But right now we are not spiking, okay, and we are just hovering there. So this is the reason why if you use the VVIX ratio, right, you become kind of like this. That's a divergence. Okay, so I go back to here again. So there's a divergence. All right, there is a divergence. Okay, all right, that's divergence. So Simon, if you don't understand, it doesn't matter. It just tells us that the market could be at a turning point and it might not go down any lower. The fear factor is not as extreme as we thought it is. Okay, so VVIX, so this is one factor, one so-called internals that I'm looking at. And the other one, that some of the other things, right, the market breadth, the internal, right, you can go to this, stockcharts.com, right? I have a paid account, but I think a free account, you also can go to it, all right? So the stockcharts.com, right? You go to this decision point chart gallery, okay? Decision point chart gallery, okay? Then you just open it, all right? I'm aware of that, but I didn't really use it, but only recently I found, hey, actually this chart, it's not bad. It shows you a lot of things, okay? So it tells you, the trend, the condition of breadth, sentiment, all in one. But for the free account, right, you can only see the S&P 500, but for the paid account like I am, I can see NASDAQ and the Dow Jones. But I think the S&P 500, it is good enough. So let me try to get to you the more important point over here. All right. So, all right. So the one that I always mention in my Facebook Live and my YouTube broadcast is the market breadth, stock above there are 20 days, 50 days, 200 days moving average, right? So this is the market graph. And you guys can, I'm try to zoom in, you guys can see that, all right? So the top one, it is a percentage of stocks above the 20 days moving average. So it is only like 13%, 13%, okay? All right. So it's at a very low level, okay? Extreme, kind of a really, really extreme level, like at an oversold level. The one that I normally will watch is the percentage of stocks above the 50 days moving average, all right? 16%, okay, it is also at a low level over here. Okay, of course, not as low as the COVID sell-off, but it is also at an oversold level also. Okay, and percentage of stocks above the 200 days moving average, okay, also not as low as the COVID, but we are also at the low level for the past, yeah, ever since the COVID sell-off, this is the lowest level. All right, well, right now we have about 500 people in the room right now. Fantastic. Okay. All right. And talking about that, the advanced decline lines, even though I never really share on my Facebook Live, okay, but I do also, and you can see that there is also a kind of a divergence. While the market S&P is forming a new low, it is not going lower. It is not going lower anymore. All right. And then the net 52 weeks high, the previously I talked about the net high, net low ratio, right? This is almost the same, all right? You can see that, we are also at a very low level over here. Of course, not as low as the COVID crash, but also very low level, okay? Oversold level, all right? And then there are a few more, the sentiment. Sentiment one, this is interesting, all right? So we have this AAII boost, okay? The AAII, I think I mentioned before, it is this American Association of Individual Investors. Basically, is like a lot of these retail investors will join this association, this group now, okay? And they will do kind of a survey to show you like what I do, how bearish are you, how bullish are you, that kind. So the kind of sentiment to get a feel of what the crowd it is doing. And based on that, right, you can see that we are also at a extreme level right now. In fact, now it's even more bearish than during the COVID sell-off. Okay, we are also at an extreme level over here. So when price crosses below minus 50, okay, it is signaling kind of extreme level also. So we have quite a number of indicator that tells me that we are at an extreme level. So this is the decision point gallery. So I'll post the link in the comments, in the comments. So you can go and take a look. But the number one thing I feel is actually the main one, the one signal that I'm looking at, it is VVIX over VIX. Okay, so this is number one I'm looking at. And of course, as I mentioned, right, on the street, there are still many people, and especially on Twitter, the sentiment is also very bearish, especially like the guru and such. They are kind of, this is not the exact low yet and such. So this is good, this is good. You cannot have everybody to have the same view. Okay, so right now, this is exactly what I want. Okay, but again, just a disclaimer first, it doesn't mean that I'm right. I'm just sharing with you what I think it is. Please, view it with a pinch of salt, okay? Whoever tells you, okay, any opinion, just, think 就好, okay? Have your own judgment, So don't let anyone affect your own judgment and really have your own judgment, okay? You need to learn that, don't sekali that guru say, oh no, this market is have more downside to come, then you feel very fearful, then you sell everything, then you never know, then next up the market turns again. All right, so this is my opinion over here again. So I go back to the chart over here. Template. This. All right, so as of now, the market market, yeah, Nasdaq, it is already up 3.42%, 3.42%. So we shall see, okay, we shall see. So at least you know how to position yourself if this is really the absolute bottom, at least for the next 6 months until the end of the year. Again, I could be wrong, okay, price could just do like that, bounce a little bit and then another leg down, okay. Oh yeah, okay, can oh yeah, and I forget to share one thing. So the interesting thing that I also see in the S&P 500 is the VWAP, the volume weighted average price over here. All right, this is the VWAP. I also mentioned before in my Facebook Live. So very similar to moving average. It's just that you put volume into the scenario. You put more weight with volume. Okay, with at a point at a pricing point, where there's heavy volume, it is putting more weightage into that price. Okay, so if you put a VWAP, all right, VWAP at the swing low over here, at the swing low over here. Oops. Okay, so this was the COVID sell-off low, absolute low over here. I put it the VWAP over here because, as I mentioned, VWAP, right, you can put at a high volume area or at a very swing low, right? So COVID sell-off was the swing low. So if we go zoom down to the daily time frame, you can see that price actually, touch the VWAP and then rebounded. So last week I actually mentioned that the Nasdaq, was holding. I think last few, I don't know, 1 or 2 weeks ago, it was holding well at the VWAP. I say price cannot break. Once break, right, price could head down lower. Okay, so right now price indeed head down lower, but prior to that, the S&P 500 actually never hit. So it's only yesterday price hit the VWAP and then kind of rebound. All right. So Ken, so this is my session. It's already half an hour already. Okay, I told Jay that I need to stop at half an hour, or else when he come up, he can talk until 3 a.m. So I need to hand over to him. Right? Any question? Maybe you can come later together and do some Q&A later. So Jay, the founder of Swing Trading, right? He will share with you, the Lunar Saga and what does it mean for the overall crypto market and how much further are we away from the stock market bottom. By the way, I didn't talk with him about how I feel about the market. So he might share different things. So let's have different views and see how we think. Okay, so let me check with Jay. Jay, are you there? Are you there? If you are there, let me know.
Hello.
Why you laugh? The hair still very tall.
Yes, I'm here.
All right, say hi to Jay again. Say if you guys can hear Jay, just say hi to him. So at least we know everything is good, everything is well. Everything is well.
All right. Hello,
Oh, by the way,
everybody.
there's some lag, so take some time for people to respond. At the same time, we have about 500 people. Okay, do give us like, share, or comments. If you are watching on YouTube, do subscribe to our channel. Do us a favor. Let's reach out to as many people as possible. All right, we are just giving value, giving content, and I'm sure you guys will love Jay a lot. He's the stock god,股神. Okay. All right. So yeah, I think everything is good. Okay. So Jay, I shall hand over the stage to you once you are done at about 4 a.m. Then I'll come back to you. Then we'll do Q&A. So let's stay until 4 a.m. Okay, Hannah. Okay. So
You're
Jay, back to
you're
you.
gonna scare off everybody.
All right, back to you. Ken.
Okay. Can let me add my screen first. All right. Let me share my screen. Okay. Let me share the correct screen. don't want to share your wrong screen. Okay, so great. Thanks, Alex. Okay, so once again, hello everybody. I am back here again at 12 a.m. 12 a.m. And then you must be thinking, how come 12 a.m. My hair still standing? No, because I reached home not long ago. So I agreed to come on to this Facebook Live. Pretty much after hearing what Alex has been saying on the market for the last half an hour, right? Pretty much I think he covered everything already. Make it 5 a.m. All right, so once again, welcome everybody. Now, let's begin. Or rather, I also don't know how to begin. And the way Alex introduced me every time, I don't dare to start already. Shy already. Okay, so on my left-hand side, I'm looking at the comments, and the comments are about 40 seconds late or 40 seconds lag time. So if you have any questions meanwhile, and if and you know my style, I always like to do interaction with all of you, right? I don't like to just talk and talk and talk without, asking you to type something. So be ready to type something furiously, and and if you're on your bed or with your phone, so type something. And if it's okay with you, give me a thumbs up, give me some love. If I say something that makes you angry, by all means, give me the angry emoticon. I'm okay. But I don't know why people do that. You don't like, then don't watch lah. Come on, it's 12 p.m. Go and sleep lah. So I always don't understand. Why people angry? Wow, I damn angry. It's like, you don't want, then don't watch lah. Go and sleep lah. What piang? Okay, so what's with the market so far? Well, I want to talk about this crypto Luna thing. How many of you are affected by Luna, or partly affected, indirectly affected by Luna? Can you let me know? Can you just type Luna? Can you type me? Can you like, oh, give me a sad face, Yeah, so like I think many of us, right? Many of my friends that I know personally, this is a more serious topic in a sense. I personally know a lot of people that lost money, and a lot of us are retail traders lah. And something that you may not know, you may think that all the so-called the KOLs, key opinion leaders, so-called people who are the gurus, like Alex, we all don't lose money. No, that's a misnomer. We also lose money, just that I think the difference is we don't, at any one point in time when we lose money, we don't lose everything lah. We lose a predetermined sum that we have determined the position size already. So we go in with the budget, and then if it's a loss, it's a loss lah. So I guess that's the only reason, or that's the only difference between people who sustain in this business for long term and people who wash out after 1-2 years. So for me, right, I am a very new entrant to the crypto market. I would say a lot of maybe a lot of you may be in this market even earlier than me. So a lot of people, how they start is they just get an exchange account, go and buy some coin, hold some coin. For me, I bypassed the whole stage. I didn't even enter into this crypto market until last year, and I straight away immediately jumped into decentralized finance. So I jumped into like the people call it like crazy. You want to jump, you jump into all the speculative ones. Well, I have my my guidance there. I have kind souls who are willing to guide me there. So I started from there, and the timing was impeccable. That's why last year was like super lucky lah. Like I started like in July, so that was the start of that bull run last year, like 2020 ran a lot lah. Then 2021, the second half, right, ran up by quite a fair bit as well. So that's where the pot really just grows from there. So do I have losses along the way? Just to be very upfront, yes, I have been rug pull before. So what is rug pull? Rug pull means the project is like a scam lah. So it do until so world class, until like, okay lah, can I put a bit, I try lah, and usually my bit is couple of thousands lah. So I just try. Then after, kena sai, you rug pull me basket. So I kena a few of them. And I also got losses into like those protocols like time wonderland, right? The one that really gone from like 9,000 to 2,000, 3,000, 2,000, then poof, all the way down. So that one I lost about 5k as well. And most recently, this Luna saga, right? And I know a lot of friends who are in this, they are in there for the 20% yield. So Anchor is the so-called the lead, or the Anchor protocol lah, like the most how do I put it? The leader lah inside this Terra network lah. So what happened? A lot of people put their money inside, thinking as if it was a fixed deposit. I have some money inside there, in there as well, which couple of weeks back, I think for starting of April, I did highlight to my students. I did share with them in my close group on my Telegram, right? I did share with them that I'm looking at some exit liquidity crisis that is on the Terra network itself. Then I'm like thinking, okay, that's where I reduced my position sizing. I used to have a near 6-figure inside, very close to that. And if I had that money in there now, I will cry. So how much did I lose this time? I'm just going to be very upfront. I lost 14,000 USD. So to me, is it painful? Yeah, lah, of course lah. Walao, I could have just go and buy watch, I can buy one Rolex also song. So do I have emotions? Yes, of course. I feel angry. I feel like, oh, what the hell? And that's how much I lost. Alex lost some as well. Thanks to our Ichi website, we tried something and it didn't work. So why am I sharing all this with you? I mean, to start off, number one, right, is to let you know that you're not in this alone. That's number one. Number two, we also lose money. All of us will lose money, and just that whether some of us choose to share with you this publicly, because especially sharing all of this publicly, right, they can have, I don't know, can have some repercussion. To me, I'm okay because I am not so commercialized. I don't rely on selling courses for a living. So for me, I'm also a trader. I also make mistakes. If I lose, I lose lah. So that's my take lah, and that's why I have no crime sharing this with you. I did lose money, and most importantly is to make money overall, and then in the long run do what's right lah. Then did I make money? Yes. Earlier on, I think that was early April. I was in a decentralized token, decentralized project since last year. I was quite early in. Alex is in there together with me as well, and I cashed out in April, early April. So I cashed out quite a fair bit from there. So at least it is I would say, okay lor, just take it as I give back a little bit lor, bo pian ma, right? So this is and for all of you, right, that cash out, before the crash, then good for you, really, really good for you. And I think what we all can learn from this lesson, right, is number one, right, position sizing. So can everybody just help me type this word, position sizing? Because we never, this is something like what do you call that, the safety belt. We don't need it until we need it. And when we need it, it better work. So why I say this is because many times, right, I have seen traders literally just make a lot of money during when the market is favorable, usually during bull runs, because most of us are very, very accustomed to buying. So we tend to be more complacent. We tend to be more like, wow, I want to buy more, I want to make more, because making a few hundred is not cool. I want to make a few thousand. Making a few thousand is not cool. I want to make like tens of thousands. So we will just keep buying more and more without thinking of the downside, without thinking of how much we can lose. So is a market, it's the market phenomenon for the starting of this year. In fact, on Luna itself, is it very like, has it taken me by surprise? The answer is no, because although the situation are not the same, but are there bear markets? Are there sudden market drops throughout the last 12 years of me trading? Yes. 2015 August, 2016 January, 2018 January, December. So these are all the notable times, right, that really defines a trader. Just like a driver, the skill of a driver is not measured by how fast he can go. That's down to the machine. It's about how well can he keep the vehicle under control when the vehicle is like spinning out. So that's what differentiates the skill of a driver. And I think the skill of a trader is the same thing. It is severely tested when the market is going down, when the market is not going our way. And actually, people think it's a very cool thing. For me, it's like, no, you don't need to think too deep into it. It's not rocket science, man. Just survive lah. So how do you survive? Position size, oh. As long as you don't burn out, as long as you don't lose everything. Do we lose money? Yes, we lose money, but we just don't lose back what we make lah. What we make already we keep lah. And if you lose back a bit, you lose back half, you lose back So will you be angry? Will you have the emotions? Definitely. As a person, as a human being, you will have emotion. If you have zero emotion, I want to learn from you. How the heck do you do that? How can you have no emotion? We are not machine. A lot of those gurus, right? They teach this one thing lah. Oh, you should trade without emotion. I'm like, you show me, how you trade without emotion? What piang eh? How? Impossible. We are humans, and I'm usually expressive when I have a lot of emotions. Okay, so does this make sense to everybody? type yes if it makes sense to you, okay? So just give me a thumbs up. Just help me type yes, and then give me, give me a thumbs up. Click whatever lah. Click whatever that interacts with me. Let me drink some water first. All right. So this is really one thing. The position sizing is really one thing that you must use it to guide yourself forward, knowing that market turmoil like what we have witnessed in Q1 2022, right? It will happen again. Hopefully not soon, but it will happen again. And every time it happens, this is your only safety net. This is the only thing that keeps your sanity. And if you over leverage, that's where you will get margin call. That's where you will get, forced to close out your position, which you may be right. Eventually, you will be right. And if your positions are too big, you're too, too over leveraged, then too bad. That's what is going to happen. You're going to get closed out first. So position sizing, it is the key fundamental to your survival in the long run in this business. And really, this is the only thing that has kept me in this business. A couple of times I would have washed out. Have I blown account before? Yes, I have. Thankfully, all small accounts doing stupid things. So learn from all of this. And if you only begin trading, like I think in this last 2 years, right? The market is very nice in these last 2 years. It's just practically one direction. So Q1 2022 is something that we are not so used to, because instead of that direction is now this direction. So what do? Then we have to adapt. We definitely have to adapt. So hopefully what I'm going to share with you tonight, right, will help you adapt a little bit. And my view, more or less is pretty much same as Alex for the short term, pretty much same as that. And I also want to attempt to shed some light with you in the sense of why is this happening? Okay, why is this happening? Okay, so far, okay, not so far everything, does it make sense? Is it good? If it's good, if it's great, at 12:14 a.m., can you just give me a thumbs up and help me type great inside the chat? Okay, I'm looking at it. Okay, so on my left hand screen, I'm looking at it. So for some of you that don't know, I have a couple of screens. That's why I say I'm looking all over the place. Not being crazy. I'm literally looking at different things. Okay. So first thing first, right? Luna, I think if you want to go and read up about what happened, some of you are not even trading cryptocurrency, just go and at least, understand this. This is a very wow event, I would say, once in a lifetime that, not never in my past 12 years I have seen something like that. But if you are in cryptocurrency for a while already, you may have seen similar things like this. And the closest one that I can relate to, in fact, before Luna, has something similar happened before? Yes, it is this coin called Mars ecosystem. Well, they may not be exactly the same. Please don't go and get in now thinking, shit, I'm not saying this. Please, this one you buy, you really stupid already. Cannot buy. Okay, I'm just using this as an example. At the height of it, right, XMS, which is a native token, right, was at 150, right? It went to 150, the Genesis event. They minted out USDM, which is their version of stablecoin. And I spectacularly see how this dropped into a death spiral. So this is something that has happened before. And what happened with Luna is not new. What is surprising that it just did, like, over how many days? Monday, in fact 5 days. 5 days is game over for a project that has 19 billion. Okay, 19 billion, and it's just poof, out of nowhere, gone. So what has happened? Well, first and foremost, right, I think the first question in your mind is the same. Okay, how many of you have this question? Is UST, what happened to UST? Is it going to happen to USDT? Is it going to happen to USDC and all forms of other stablecoin, like maybe BUSD, Binance USD, or even DAI? How many of you have got this question? Can you type the letter Q for me? Can you just type the letter Q for me? How many of you want to know this? And I think probably yesterday was what, Thursday, right? Some of you got a scare, right? USDT dropped to, I think, 0.93 or 94, somewhere there. I think it's 0.95. Confirm I saw it's 0.95. So yesterday I saw this, and why this, right? It's because of redemption pressure. 3 billion outflow from USDT, Therefore, the pricing momentarily came down. So what was the difference between the three, like USDT, USDC, USD, or the others lah? Elvin from Dr. Wealth, right? He shared this very good point before, or this very good 10-pointer. He always shares this. Let me see if I can find it. Okay. It's about the currency flow, the Trinity, the Holy Trinity of currency flows. Lah. Then do go and check out some of his posting. I think it's pretty interesting. Yeah. So let me see if I can find it. Let me see very, very quickly. If I can't find it, then so be it. Okay, this one. So let me just put it up a little bit. So you can see this is the Impossible Trinity. So what he says, right? There are three components to a currency. Number one, fixed exchange rate. So this is what the stable coin is supposed to do, have a fixed exchange rate pegged to something. So in this case, it is pegged to USD. Then you must have free capital flow. That means you must be able to mint and burn easily, right? And then the interest rate, it must be independent. So out of these three, right, you can only control two, right? You can only control two only. You cannot have all three. But what this UST wants to do, or in fact, this stable coin wants to do, right? It's all three. It's literally they want all three. Using what? Using a balance mechanism. So for UST, how is it different from USDT? How is it different from USDC? Well, USDT and USDC, right? They are collateralized. I wouldn't dare say they are 100% collateralized, but at least they are partially more than half collateralized. I believe USDC is a lot more stringent. USDT is backed by a lot of commercial paper, but they're rolling back. So it is slightly different from how UST behaves. UST, right, uses a burn and mint mechanism, which on the other part is Luna. So what happened to the price of Luna is actually built in one. It's supposed to happen one. It is designed to happen in this way. So with the fallout of UST, I think people will just they want to test lah. Naturally, you will be scared. Like for a moment yesterday, when I saw USDT drop to 0.95, right, I was like, really? Because I have got significant exposure in USDT. So luckily, before that, I already switched part of it into USDC already. So I spread out my risk also. I don't just everything put in one. But the main difference is the supply for UST is under a burn and mint mechanism, which is designed to do this way. So what happened is when people redeem the UST, they sell away. So what happened? The reverse happened. So yesterday, in a nutshell, or 2 days ago, in a nutshell, the supply of Luna simply just exploded. Well, because everyone was like redeeming the UST. So they took out from Anchor, mostly Anchor, because majority of the whole ecosystem is based in Anchor. So they took out, and then more and more Luna is being minted. Then guess what? Then flood the market. So Luna went from a spectacular, I believe, 3 weeks. I think it was 3 weeks, 2 weeks. Well, it was a high. I don't know. I can still find the chart here, but because today it was delisted from, see, Binance one is gone. So, so it was 119 on the starting of April. And then it dropped to, right now it's still trading because they already switched back the thing already. The pack has not resumed. And then right now it's like getting to the, yesterday we watched it going down from 1 cent, then half a cent, then 1/10 of a cent, 100 of a cent. So now it's like, I don't know how many decimal places is it. 1, 2, 3, 4. 4 zeros and a 5 behind. So is this going to stop? The answer is no. So why? This is what we call the death spiral. So can everybody type this word called death spiral? And I want to bring this up is because I think couple of the people have already mentioned this before. I think Chris mentioned this to his community yesterday as well. Was it yesterday or 2 days ago? So don't go and catch this in a sense. You may be thinking, hey, this is one of the best risk to reward trades that you can have. Well, I beg to differ. Why? Because this is not just a technical drop. Anything that is technical drop, anything that is short term, like CEO scandal, not accounting fraud, but maybe some bad news, a bad quarter earnings, that kind, right? It drops, but it's still a damn good company, solid company. then okay lah. Your risk to reward is like very good ma. You're risking nothing, then you're risking a little bit, and your reward is very high. But this is a case where fundamentally it is designed to die now, unless there's a white knight, unless the founder, I think Do Kwon. So so Do Kwon, I think today one of my friend, right, he one of Alex and my friend as well, I think Andy. So he's in Australia right now. He changed his name to Tu Kwon. Kwon, Tu Kwon. Tu Kwon what? Tu Kwon Chai. So I went to Kwon Chai to the coffin lah, die already lah. So Chinese Kwon Chai is the coffin lah for Chinese lah. So I was like, what the hell? Like that also can. So I thought, okay, this is a good pun. Fundamentally, there's a problem because as long as UST doesn't returns to peg, right? Because UST is supposed to go back, ma. So more and more Luna is just getting minted and minted and minted and then flood the market, and then that's why the halving is happening. You halve again, you halve again, you halve again. Then I think it's gonna become Dogecoin. So sooner or later, I think they are racing to see who got more zeros in front now. So fundamentally, this is a problem. Don't go rushing in thinking that wow, it's so cheap. Alex and I myself have already tested on your behalf with some money of ours. So don't test. It's a spectacular fail, I tell you. Oh well. But we're just thinking, hey, maybe they will step in. We're hoping for that, but this guy really just keep quiet, and then all the VCs that were backing him just refuses to come back in. He's like, no, you want more money? I'm not giving it to you. So this death spiral is happening. It's not coming back. So don't go in thinking, wow, it's cheap, it's cheap. Then you buy one plastic bag for even if it's cheap, so what? You tell me you buy a Hermes bag, you buy a LV bag that is got discount and it's authentic, then good lah. That's it's a good thing on discount. You bloody hell, you buy one plastic bag here for what? You go and pick on the floor, also the same. So this is what is happening right now. Don't get into all this. And if you want to read what's happening, right? I think this is everything you need to know about the TPEG. In fact, Twitter is a good source to learn all these things. I'm just gonna place it in the comment section. Do go and check it out. So this is one, and then you can go and look at what founder on Binance talk about this. Talk about this. Why are they delisting Luna as well after dropping like 99.99999%? So you can go and have a read about this lah. So what is my key point here? My key point is don't go rushing into this thinking that it is cheap. Number one. Number two, don't think that this is the end of the world. Yes, what will happen here is going to spread fear, uncertainty, doubt, FUD lah, onto other asset classes as well, namely within the crypto spaces. And of course, I know that among some of us here, that is still live listening right now, you may think that cryptocurrency it's a whole Ponzi scheme. By all means, it is perfectly fine. I'm not here to argue with you. Do what you think is best for your money. That is important. Why? I cannot deny the fact that I made money through this. So, as risky as it is, go in with your two eyes open. So can everybody type two eyes open? Meaning, don't really understand. Okay, just let me type this down. Really go and understand what are you buying. Why are you buying this? And after you have done all your due research, your due diligence, right? The next thing down is really just position sizing only. It's really how much you can afford to lose. So what is my thinking or my approach when it comes to this kind of high risk, undertakes? Well, undertaking, what is my approach? Come up with a budget that I can lose. And if it goes down to zero, poof, it goes down to zero. I don't care. Not that I don't care, but it's like, but you learn something. You take it as you pay the market some fees to learn, but make sure you get something out of it. Don't get entertainment. Entertainment, get it somewhere else. Get a good lesson. To tell yourself, to show yourself maybe one or two things about yourself when it comes to money management. Learn that. Learn how to select a better project properly. Learn from, the information. It's all about information. That is the only difference why some people dare to do some things and some people do not. It is about the information that is on hand. The more information we have, the better decision we will make. So at the end of the day, right, go in with two eyes open, stick to a proper position sizing, and then you do what you do lah. And then just last long enough until the rest of the population catches up. Because I would dare say, right, less than, I would say, 10% of the people in financial markets right now. Okay, maybe in Singapore we have a higher concentration, higher percentage, but this is still a very novel thing that only exploded in the last 5 years. So less than 10% of the people are into this. We are onto something that is very early. And of course, in something that's early, there are bound to be things like this, like Luna happening, and it will happen over and over again. It will evolve. So we need to go in with two eyes open, watch our position sizing, and learn along the way. And this is why, personally, why I'm in there. It's not because of greed. It's because of this thing called alpha. So can everybody type alpha? So what is alpha? Alpha is literally the return above market. The highest number of alpha can be found in this market right now. So personally, that's why I'm in this. And I know exactly why I'm in. I know exactly how much I should put in. So if you are just in here for greed, right? My suggestion is don't. Just do something that you are used to. Do something that you are, a lot more accustomed to. Like you can't ask a F1 driver, be it you support Lewis Hamilton or Max Verstappen, right? You can't ask a F1 driver hop onto a super bike and then go on to bike racing and expect him to win the championship. It's totally different thing. But both of them are good in their things. Okay? So this is my key message when it comes to this saga. For me, I'm not somebody that will say no. I will, okay, what is this? Let me find out and let me test. I'm a curious natured person. I like to test out things, and sometimes I get beaten, but just make sure I don't die from whatever things that I test. Don't die. And in a financial sense, right, don't die means what? Don't lose so much that you walao, then everything no more already lah. I think that's quite sad. Okay, so whether is it buy Bitcoin or can already, or buy Ethereum can already, whatever you believe in. Okay, like I have my set of belief based on my research. You have your set of belief based on your research. Okay, so this is where or what I want to what I want to talk for the first, how long is it? quite a fair bit, quite a fair while already. So for half an hour already. Okay, so this is hopefully giving you some clarity lah about whether UST, USDT are they the same? The answer is no, they are not the same. UST is based on a burn and mint mechanism, which is designed. That's why Luna is happening like that. But if you are looking at USDT, right? It is kind of a little bit more centralized. The supply, it's a lot more centralized in a sense. They are able to control. They can burn. They can print more if they want, whatever they want. So they are able to bring it up to pack. And it is in a situation, personally, I feel too big to fail. In a sense, a lot of the industry big boys lah, the real big boys, Binance, any exchange, they are in the same boat as USDT. They will not let it fail. UST no matter how big it's only a third largest. And even the third largest, right, the percentage that they represent in this market is quite small. Okay, it's a low double digit. USDT, USDC, they are more established. USDC being the more higher collateralized one, the collateralized ratio is higher. So do go and do your research. All these things are, available. Go and do your research, but don't trust it. Still, spread it into some other places lah. Like for myself, when I see USDT like that, I'm like, okay, I know I don't feel good seeing the thing drop. I also like, wow, is this like USD? I also kanchong. I also like, oi, real or not? Because my amount that is inside is significant. So what I do before that, I already spread a few already. So unless the whole crypto, the whole world goes crumbling down, if not, I hope it will still be there lah. And if it really goes down where I die, it will be damn painful. But where I die, I don't think I will die lah, because I don't go into leverage. I am not getting in this position through debt. That's the most important. At most, I lose what I have. I think that is the bare minimum. That's the bare bottom line that we should be responsible to ourselves and of course to our family lah. Because whatever that happens to you, right, not just to you, it affects your family. Your financial situation will affect your family again. Okay, so yeah, is XSGD also a stable coin? Yes, it is. It is. But it's not that big lah. But for Sing dollar, yes, it is. But yeah, just go and do some research in it and to me spread it across lah. I know of friends that have quite a fair bit in each of them. So it's just do your research. I think that's very important. Go in with your eyes open. Okay, go in with your eyes open. Both eyes open. So if your eyes are as small as mine, then open it bigger. Open like that. Okay, hopefully you can see more things. Okay, so enough of this. Enough of the Luna Saga. Let me jump to something that I think and I dare say I'm good at. Okay lah, not really good at lah. Just okay lah. Still can survive lah. So for the market, right? I think just now when Alex started, I saw he asked a few what do you guys think about the market? Let's say moving few weeks forward, few months forward, whether is it whether is it bullish, whether is it bearish. It's a good mix lah, and I think the mix is something along this line. So this is something that Alex brought up again, and that's why I say I think he covered everything. He covered every single thing. So this is the AAII, American. I see that. I don't even know, and he knows what it stands for. I don't even know. American Associate of Individual Investors. I always call it AAII. So I do look at this from time to time to give me an idea as well lah. And of course, by doing Facebook Lives like this, webinars, it does gives me a good feel of what the general retail trader is feeling. And usually, the general retail trader are the one that are very emotional based. And presumably they are emotion based because they lack of a trading plan. They lack of some surety lah. And of course, when the money is concerned, we will be very stressed lah. That's for sure lah. Like every time I click something I want to buy and the position is kind of big, right? And I'll be like, wow, real or not? I also scared. So this is just human emotion, but at the end of the day, where the focus should be, it should be on a plan. It should be on something that is thought out when the market is closed. It should be something that is planned well before you enter. Because I believe Alex and myself, we have received a lot of questions from different individual asking us about what I think about this stock. What I think about this is like, what do you mean what I think about this? So usually my reply is this: how vested are you? That's usually my reply. Because in my initial years, right, people always ask me what I think. Then I tell them grandmother's story. And then at the end of the day, right, they also don't know what they're supposed to think. So I ask them how vested you are. So the first question will tell me how stressed they are feeling. Let's say, oh, I got a, let's say, like, imagine you have got a 200,000 position going on in SPY right now. You tell me stress or not? Stress lah. Your 200,000 now, I think down to 80K only. So that is where, you need to gauge lah. Okay, that's where you need to gauge. And usually people, when they ask that question, right, this usually means one thing. And if you are thinking or at least tempted to ask this question, I think it tells you one thing, that your plan, it is not well thought. So what is a bare minimum of a plan? I think this one most people will have lah. If you don't even have this, then you are not trading. You literally, you are just, I don't know why you're buying also lah. You maybe don't even know why you're buying. Maybe you're buying due to greed. Maybe you're buying due to fear. So let me just be very candid, okay? Because there are a lot of people who already say things, sugarcoat them, and then they try to make things as bad things also say until become good. For me, I don't like that kind of style. If I think it's a stupid thing, I tell you it's a stupid thing. Can I have that? Can I have that permission from all of you? If it's okay, can you just help me type yes? Okay, so what is the bare minimum of a trading plan? You need entry price, your position size, and then your exit price. This is what you need, right? Your entry price, position size, exit price, and this is what usually most people have. One tier, one freaking tier of entry price. Just one. So Why I think this is the bare minimum, but it's not enough. Why? Because let me just ask you something very upfront. What do you set out to do when you were a kid? Like when you were a kid, what were your aspirations? How many of you wanted to be a lawyer? How many of you wanted to be a doctor? How many of you wanted to be a, I don't know, to be a billionaire? See me, everything also don't do. No, right? You don't grow up thinking like, hey, I want to be a YouTuber. No, our generation don't have YouTuber yet. Okay, today generation they have. So my nephew is telling me I want to be a YouTuber. Wait, do you know how you go and edit a video? You cry. You think that what the video record and everything upload like that, you wait long. All the work done behind you cannot see. Okay, so what's my point? Okay, my point is this. Whatever that we set out to do in life, right? We usually don't end up there. Lah. Am I right to say that? How many of you agree with what I said? Can you just type right? Can you just help me type right? That means whatever that we initially planned that we want to do, and right now today we are doing a different thing. So like regardless what you study, some of the things I read on newspaper, right? The guy studied to be a doctor, to be a veteran, a vet and all that. Then end up going to be a hawker, going to be a baker, going to be a stay home, don't know what. I don't know lah. So like for me, still not so bad. I studied banking and finance. I am still in the finance world, but I am not employed. So every time when people ask me, Jay, what I do, I'm unemployed. I'm so sad. Hey, anybody want to employ me? Nobody. Yeah, lor. So I have not worked for not as in not work lah. I work every night. You all don't see. My mom thinks that I'm playing game for the last 12 years. She thinks that I'm a pro gamer or something. But I have not had formal employment since I finished my uni. Okay, since I left uni. So and every step of the way, right, we just plan. So having one plan is not enough. Just like in life, right? We don't just have one plan, one way. I know some of us are like that. Oh, I want to be I don't know. I want to be a policeman. That was one of the things. Oh, why? Because can take the gun. Very, very cool. As a boy, that's all we wish for, right? All we want to, right? Wow. Then after, wow, no lah. Every day look at the gun, also cannot fire, useless one. Then I have to take care of it, have to protect it, have to clean it some more. Walao, this one give me more problem only. Right? Singaporean sons, you all understand this, right? So we have a plan, but we must also have backup plan. We must also have a lot of other scenarios, a lot of what if. Okay, a lot of what if, what if, what if, what if this, what if that. So all this what if, right? I don't think at one moment notice like that immediately you can know what it is. But the more you do, the more you trade, the more of the what ifs will be, you'll be able to come up with the more of this what ifs lah. So besides having a plan, right, I think it's also important, just a plan, a backup plan, but you also need to know that things that, what if suddenly tomorrow, something like that happen out of the normal, like I don't plan for this, what are you going to do? I think that's important. Why? Because if you don't have a what if scenario that is rehearsed in your mind, then you will panic. And when you panic, what you do? Fear, uncertainty, doubt. Then you anyhow sell, anyhow buy. I don't know what the heck you are doing. Then usually, if you look back, right, like I look back on my mistakes, it's like, oh yo, why so stupid one? Why am I so stupid? So that's how we grow. The good thing is that's how we grow. That's how we learn. But I think this is important. If you do not want to panic, if you do not want to have all this fear, uncertainty, doubt, and when shit happens, you like, how you go about, direct messaging every different guru and then ask them like, what about this? What about that? Because I do know of people who are still holding on to C Limited, having buy at $300, they are still holding it. You buy Alibaba at 160, you are still holding it. I'm like, I don't know. And I won't tell you that it's bad. I will just tell you it is not me. I focus on momentum. I am good at it. I'm not a good value investor because I grow bored quite easily. I'm like, I wait so many years, cow come home liao. My calf become a cow, my cow become something else. So that's not me. Right? And another thing is, I think a lot of us want to be too many things at one time. We really want to be too many things at one time. We are value investor, we are a short-term trader, day trader, then everything, right? Also we can do one. Then our position from short-term doesn't work, right? Jump to the next time frame. Oh, never mind, I hold for a few weeks. Few weeks, right? Never work, right? Never mind, I hold for next few months. Next few months, don't hold, right? It's okay. I just keep it there and don't see it will come back. Good job. That's always all. That's all I can do. Good job. Because whether it can come back or not, I don't know. Maybe it will. Like Tesla, everybody was like saying, no, Tesla is not supposed to be so much. And then boom, it went from $50 to $1,000. Who can say that it's like, oh, shouldn't be so high? Well, the price is what the market decides. What? So the point here, again, back to this, have a plan and then also think about all this what ifs. Okay? So guys, so far of what I say, am I making some sense? If you think I'm making some sense, can you just help me type? Great. Can you just help me type that? So if you really don't have plan, I tell you panic on, you go about asking everybody, then and that's what we call I don't know, desperate already, So I think that's not healthy, especially when your money is concerned, right? Elvin, cow become wagyu. Cow become wagyu. I just don't dare to say. Thanks for saying that on my behalf. Okay, so this is what the AAII members they feel. Majority are still bearish, which is good because if most people are bearish, or at least half of them are, you can see that the peak fear was over, and then they are still about half fearful, still okay. And what does this mean for the market moving forward? This usually means that okay, especially all this if they are retail traders, right? 75%, 80% of retail trader they lose money. So if majority of them think that it's going to be, bearish, then where do you think the market will go? It should at least stop dropping lah. Okay, so this is, I think, the same point as what Alex brought up just now. Okay, so CK asked a very good question. If you have long-term value investing, and I'm just going to be very upfront, this is not something that I do myself. I am not good at it. All right, I know the principles behind it. I know how to execute this, but I'm not good at it because I'm not a practitioner of this. If you ask me about swing trading, I do this day in, day out. I think I'm a lot more familiar in that. But what are some rules that you should adhere to? Number one, I find that if you want to do long-term investing, right? Number one, price must agree. You don't just catch a dropping knife, right? Okay, the price must agree. If you agree with this statement, can you just type number one for me? Price must agree. Meaning if you think C Limited, okay, can still come back and make a comeback in like, I don't know how many years time, right? You want to buy now. I don't know why you want to buy now, because the price is still in a very, very clear downtrend. So what do I mean by price must agree? At least let the structure go back normal first. At least let it clear some of the important areas that were, they were from support and then now become resistance. At least clear those levels first. You may not get it at the bottom, but sure as hell, your risk will be a lot lower when the prices have overcome this level. So the price must agree. And then for long-term value, what are some of the exit rules? Think about how much is enough. Think about at what price level I will consider taking some off the table. It can be partial profit, it can be half. If you're like Warren Buffett who doesn't believe in selling, then don't sell lah. Just take and keep somewhere lah. I don't know what's your plan, but at least for me, this is what must be first. The price must be agreeing first. So I won't be buying into this now, evidently that it is heading down. And yet there are people who bought it up here and still holding it. I'm like, I'm shocked. Okay, I have no words for that. Okay, so price must agree. So now, market P ratio. Let's look at where the P ratios are right now. Dow Jones. So I'm always looking at three. Dow Jones Industrial Average, Nasdaq 100, S&P 500. Finally, Nasdaq 100, it has come down to 28.96. So 28.96, right? What is the implied yield? Don't care about the dividend yield first. Dividend yield is 0.82, but the implied yield, price earnings ma. So P ratio is the price divided by earnings. So the implied yield, right, if you want to work backwards, is you take simply 100 divided by this ratio lah. Okay, this ratio over here. So what is the implied yield? This should be, let me see, 100 divided by 28 point something lah. Okay, 28 is about 3.57. So 28.96, that's about 29 in fact. So yeah, 3.4, 3.5, somewhere there. So the market ratio, okay, if you look at the implied yield, this is 3.5% plus the 0.2, 0.82 is about 4.3. So why does NASDAQ always get sold down first whenever you see, or at least news of the 10 years yield increasing? So if you look at the 10 years yield, right? 10 years treasury note yield. Okay, if you look at this, it hit a height of 3.1 something. Okay, 3.1 something. So can you imagine if you hold a bond and then it give you 3.1%? If you hold a bond and it give you this, and this is risk-free, capital guaranteed, yeah, you get the idea. So if you get something like this, risk-free 3.1%, and then you go on to NASDAQ, that is 3.5% implied yield, implied return. 3.5%, 3.1%, which one makes more sense? Obviously, not NASDAQ, right? And therefore, right, every time you see the biggest movement, the biggest volatility is definitely on the NASDAQ. So when it goes up, obviously NASDAQ will go up the most. When it drops, NASDAQ will come down the most. The only time or the only few time that is different, right, is where Dow 30 components have very solid earnings. And because Dow 30 is a price weighted, what do you call it, index. So if you got heavy, the big components having those earnings announcement, and that was when I saw the Dow components really go different from all the other people, right? So looking at this, it is a lot more healthy now. So that's number one. I think this is a lot more healthy now. S&P 500 returning to 22, it is okay. At last year, one point in time, it was about 45. NASDAQ was 49. That was the height of it. Then Dow Jones was like 25 or something. So I do track this quite often to see where the market is going right now. Is it considered expensive? So I look at fundamental side. I look at some numbers first before I go and look at the charts, because just looking at the charts won't make sense if you do not understand the fundamentals. Just like if you look at Luna chart, you think, wow, it's so cheap. But if you really understand about what is going on in the Terra ecosystem, then you know that, no matter how cheap, doesn't make sense lah. So this is one of the first few things I see first. From a price earnings point of view, the P ratio, it's coming down, but it is not the cheapest yet. Okay, it is not the cheapest. When every time there's a much stronger downturn, right, then this will come down, to be 20 and below. Okay, 20 and below. When there's a much steeper fall, like I think the recession, not recession, sorry, the 2008, and before that was the .com. So we have not seen those level. Okay, so that's the first thing. And since the market is not expensive now, it has dropped to a level that is not expensive. Where will it make sense? Where will it stop? And this is something that Alex, I think, brought up just now. We have seen, a 2 years bull run, kind of a 2 years bull run that is glorious. And then we have a Q1 that doesn't make sense for most new traders. So last year, I think some of my community members that are still watching this live at 12:50, last year I talked about this breakout, saying don't buy this breakout. And I didn't expect that it's going to come down. And then after that, it rallied. I got in here. Okay, I got in SPY when it broke above. And then right now, it seems to be sliding down again. Why? Why this drop? Because right now, the market is being weighed down by a couple of things. Namely, not so much by the yield curve. Okay, the yield curve is doing, I would say, not bad. I wouldn't say it's like healthy, but it's not bad. So let's look at where the yield curve is. All right. So what is the U curve? U curve is just the bonds, different tenor of the bonds. You have 3 months, 2 years, 5 years, 10 years, 30 years, blah, blah, blah. And generally, it should be uptrend, generally. So how a normal U curve should look like is something like that. All right. So is this clear with everybody? If it's clear, how many of us we have? Okay, we still have a couple of hundred. Right? Yeah, I think so. So if this is clear with you, can you just type clear for me in the chat itself? So the yield curve, this is what it's supposed to do. And don't panic. You track this, but don't panic. All right, you see the yield curve will go from normal, and then it will slowly flatten. It will slowly flatten over time. All right, it will flatten over time, and then after that, it will go into inversion. And when it inverts, right, it's not like a fixed there, fixated to be inverted like forever. No, it doesn't happen. It's like contraction of a pregnancy. Can you imagine you muscle cramp, you cramp in perpetuity, you think you will die, right? No, it's cramp, then relax, then cramp, then come back, right? So the pregnancy contraction is 10 times worse than that, or maybe 100 times worse than that. I don't know. Only ladies will know. So so this is what will happen. You go flatten and then you will invert, come back, invert, come back, invert, come back. So the key is not to watch for the inversion. The key is to watch for the frequency of this inversion, which we have not seen it, that much yet lah. Okay, the frequency. Can everybody type frequency? I think that's important. All right. So can everybody just type this? And if you're on Facebook, just let me type this because I'm looking at the chat as well. So at least I know that it's making sense to some of you. Then right now you can see this normal, and yeah, it just flattened a little bit, right? You can see that it's flattened, and that was in 2018, flattened, and then drop, and then goes back normal. And then what happened is towards the end of this year, right? Or rather the starting of this year, then it starts to do this. This is where, right? This is where it is starting to becoming flat. And the inversion that people are looking at, right? So you can see that the 20 years is above, the 30 years is below. And then there is an inversion between the, I would say not the 2 and the 10. The 2 and the 10 are still quite healthy. So it's like 7 and 10. So generally, it's not yet inverted. What I want to see is like true fear, right? The true market fear shows you a huge inversion, like a very obvious one, right? It's a very, very obvious one. Just like a pregnancy contraction versus a muscle cramp. You will be able to tell the difference. Yeah. So right now, we don't have it yet. And even if we have, should you panic? The answer is no, because you still have about 6 to 12 months before the thing, actually becomes a bubble and it pops lah. So it's going to take 6 to 12 months at least. So this is one of the things I look at as well. So PE ratio, then the second thing will be this U curve. So how often do I track that? They don't change all that often lah, but I do look at them like every 1-2 weeks. I will look at them. They don't change all that often. All right. So what is the next thing which I think is more pressing? It is in this article here. All right, it's in this article. Let me just paste this onto the Facebook. Can I enter this? Can I enter? Cannot enter. They don't allow me to post. Okay, never mind. This is on routers. So why the market suddenly just tank, recently lah. This second leg, right? Okay, this second leg of the drop was because of one thing. Number one, Jerome Powell mentioned that in May, I mean sometime earlier on, so that was during this time lah. All right. So he mentioned that we are going to price in a 50 basis point, or not price in, but be ready for a 50 basis point increase in May, which has happened. And that's why when it happened here, the market rallied. The market just rallied up. But I also did mention, don't go and chase this. Why? Because the structure is still not up yet. It has not cleared up, a previous base. It has not overcome anything. So it doesn't make sense there. It really don't make sense. People who are in my community watching the COTD, my own, swing trading community, I've told this. Okay, I told them this. Don't buy this until it clears. It does a reversal in the structure, and then I think that makes more sense. But right now it doesn't. And what comes after that is like a walao, it just tank. Why? Because this is what the market is looking at now, and I presume is this, right? The traders are pricing in two such outsized rate hikes, which in May, we are looking at a 50 basis point. And they are even looking at a possibility of a 75 basis point in the next one, which is coming in June. So yeah, start and end of every quarter, you will have the FOMC meeting minutes, right? So this is where they are probably pricing in a 75 basis point. So this will bring the interest rate right up to, I believe, is 1 point something already. So let me see. Where's my interest rate? My interest rate right now is 1. So this is on trading economics. Right now it's 1. If it goes up by another 0.5, okay, market is already pricing in 75 basis point. If it goes up by another 0.5, it should go up about here lah. And at the end of this year, right, the target has also been revised. The original target was about here. The consensus, the expectation was here. But because of the two outsized hikes that were so-called being bombed onto the market, right now people are looking at somewhere 2.5 to 3%. So this is the new norm, and the market is reflecting this by coming down. So usually this is what happened, and this is what the effects of pricing in is lah. So if you're experiencing this for the first time, it always happens. And when the market always, when they announce this 75 basis point, right, like, it don't make sense. You increase interest rate, why the market still go up? Like, because the market dropped previously already. Then they realize, not so bad, huh? And then they come back lah. So this whole effect is called pricing in lah. So can everybody just type this priced in? Can everybody just type this for me? Priced in. Right, so on the macro basis, right, this is what is going on. Why? Why are they looking so aggressively to increase interest rate? Why? Because the inflation rate is running up. Right? So it pays attention. Okay, it pays it pays out if you can track this. Because of COVID, because of QE Unlimited. Okay, QE Unlimited. The market literally just printed money, and people just buy and buy and buy, and the inflation just got out of control. So right now they are reeling this in. And as they are reeling this in, I think it's pretty healthy right now. That they should at least bring it down. Okay, they have a target inflation rate. So where the market will go, the equity market, the crypto market, where the market will go, it is largely dependent on this. It is largely dependent on where this will go. And because where this will go will affect what the Federal Reserve will do. And I think now this is the whole big picture that we are looking at. So this year, what is the leader for the market? I would say Federal Reserve. Just look at what they do lah. All right. Pay attention to some of the things that they are saying. I think that's important. All right. Pay attention to some of the things they are saying. And because of the things they are saying, the traders, the market participants will price in a certain degree, a certain buffer. And by pricing in that, usually that is reflected on the market. Okay, so far, does it make sense? Everybody, does it make sense? At 1 a.m. Singapore time, is it still making sense to all of you? Type yes if it still makes sense. All right, so where are the key levels? Well, I'm not going to touch on the breadth and all that, because just now I think Alex brought up some of them. Personally, I'm looking at MMFI. MMFI is the percentage of stock above the 50 days moving average. I do think that the market is in for a short-term bounce. Why? Because we can see that for the last 10, 11 years, right? The gray color zone is down here. The red color, the top two. This is the best fit top. All right, this is the best fit top. This is the best fit bottom. What does this measure? Is market breadth in a sense. They look at the number of stocks in the overall market. How many percent of them are above the 50 days moving average, which is a medium-term breadth indicator. Short to medium term, not exactly long. A long one will be 200 days. So best fit bottom, right? How many times did it actually hit or come near the bottom? Well, I would say 1, 2, 3, 4, 5, 6, 7, 8, and then this is 9. So out of how long? Out of the last 11 years. So is this market right for a bounce right now? Well, I would say yes lah, because it actually hit the zone over here. Is it like that kind of very bearish during COVID, that kind of phenomenon? I don't think so, because it was single digit. That was crazy. Nobody knew how to react to COVID. Right now, after 2 years, you tell me the next variant of the COVID is going to crash the market. I say good luck in believing in that lah. For me, I don't believe in that, because for 2 years we already learned how to deal with it already, right? So right here, short to medium term, I think we are at a bottom. So it also pays, right, to look at where this thing will bounce. You know, sometimes when the market bounces up, right, like wow, very fierce, right? Then you see, when the market bounces up, where is the neutral value? Neutral value usually is about not usually, it is always at a 50%, okay, 50% area. And as of late, right, since the starting of last year, right, you can see that whenever the market hits around between 65 to 70, can everybody type this? 6570. Tomorrow, just nice can go and buy 4D. 6570. Can you just help me type this in? So 6570, the zone over here, whenever it hits there, right? What do? Don't go, don't go so happy. Learn how to tighten some of your positions. Learn how to, just like a rubber band, you pull it long enough, you let go, it's going to shoot up, right? Shoot to where? Shoot to somewhere here lah. So these are the things that I look at first before I even talk about individual stock. And I want to make use of the live, this Facebook live tonight to talk about this lah, because you guys don't see me often. You all see Alex quite often. You only see me during the summit is organized by him, and pretty much besides this, you all don't see me at all. So take a look at all this, and I want to take this chance, right, to talk about all these things that I think you are not paying attention to. I think this gives you all more value, rather than you ask me, oh, Jay, what do you think about this stock? Okay, lor, up lor, okay, lor, down lor. I mean, that is just one time. Instead of like, just giving you the fish itself, I rather show you how to fish. How do I fish? What am I preparing before I go fishing? And hopefully you learn from this, and all this are available to you for free. So just learn from this line. And I wish I had somebody like this that I can learn from. When I started out, I read all the books that you can see. They are behind me, above me. I read all these books. I tested out their things. Some worked, some didn't work. I attended many courses as well. Some are fantastic, some are just questionable. And this is what made me into who I am today as a trader, right? So look at this. This is one thing that's I wouldn't say 100% accuracy. Usually there is a 1 week lag time. Okay, 1 week lag time. Look at this. So looking at the market, where will it go? Well, it coincides with a few things lah. Number one, so let me just pull up. One, two. Okay, so now I know there are a lot of lines. Let me slowly explain one by one. Let me hide out my own drawing first. It makes more sense. What is this? This is Alex's favorite, central pivot range, CPR. Okay, central pivot range. This is the yearly one, and then the monthly one, it's here. Okay, so this is what Alex and myself we use, and I think you will see him use more often because you see him twice a week. You don't see me you only see me once every quarter. It is already at S1. That's number one. Okay, one confluence. Number two, the volume is, okay lah, not the highest, but I think it's pretty reasonable. I think there still can be one leg down and flush out the shit out of most people who are like, I'm still holding on. No, get lost. Secretly, I'm hoping for that one flush down before the thing come back. And am I going to like buy now? The answer is no. There are a few things I'm waiting for before I'm considering a more aggressive buy. So looking at this now, it is a technical bounce. We have that. And where are the key levels? Looking at this This is VWAP, just in case you are thinking what the heck is this. This is VWAP, volume weighted average price. So it finally came down and touched here, and it was like, hey, okay, go back up. So as it goes back up, right, as it goes back up, where is the immediate key level? Number one, for it to hit 4,200, wait. So far. Now it's going into the number section already. Yeah, you're still alert already. Are you still alert even at 1 a.m.? No, I'm not going to go on to 4 a.m. Don't worry. I also want to sleep. If you are ready, can you just help me type ready? Just help me type ready. Then I'll share with you what I think of this market based on whatever complication that you see on the chart right now. It makes sense to me because I'm the one that constructed it. It may not make sense to you. It may seem like, what the heck is confusing? So I don't have many indicators. I don't like to use that much indicators. I like to use lines to explain or to understand what is going on in the market. All right, so let me hide out some of the not so important stuff. So the market is at a confluence, in a sense, the market breadth. Okay, the breadth ratio, it is at a low. It's at a low of just now how many percent? MMFI is about 17%. So it hit about 12%, and then after it rebounded up. So market breadth is at a low. These are the signs that are pointing towards a market bottom. So continuity of policy implementation because Jerome Powell is nominated for second term. Yes, I think so. And actually, it's a good thing because next year, most developed economies are expecting a recession next year or late next year, right? And it's a good thing because if you don't have bullets, to fire when the recession hits, then it's going to be a hard landing. So increasing the interest rate now is a good thing, although painful, but it's a good thing. So that next time when recession hit, we are able to have that, that easing and then that V shape that we saw in 2020. So if right now we are still at zero, I worry, we head into a recession, I'm totally naked. I don't have bullets. I got a gun, I got no bullet. Then that's naked. And they are also tightening up on the QE. It went from like at the height of it, I think was 300 over billion asset repurchasement per month. 300, then go to 250, then go to I think 100, 80. And now this is a double whammy. Why? Because QE is now zero. Moving forward, it's going to become negative. That means they are not buying anymore. They want to sell back. They want to unload their balance sheet already. So QE, it's going down to zero or beneath zero. This is the first thing. And interest rate is increasing. So this is the partly or mainly the reason why the market tanked like this. Because the last time this happened, the QE came first and then interest rate came on later. So it's like one after another. Here it's like, oh, in a matter of 3 months, everything, let's party together. And then come down. Then just nice. Russia, Ukraine war, then Omicron, whatever, cron, then now all come down already. So everything just come down together. But right now, are we due for technical bounce? I think so. I may be wrong. I may be like totally wrong. But it all depends on these two key levels. Number one, this is the VWAP. So this VWAP level is about 3875. So this is about 3875. I'm gonna give you all 4D. So tomorrow you can buy, right? So number two, I am watching this. This level is what I'm watching myself. I shared this with my graduates on Monday when I did live trading with them. So 4025. This is a key level. On Monday, right, I tell them, well, if it breaks through this level, I think this will become a sticky level to overcome next time, right? 4025. And you can see that today, when the market hits at 4025, it got rejected there, out of nowhere, right? To you, it may be out of nowhere, but I'm watching this level for a while already. 4025, if anything meaningful were to bounce up, like, rally up to 4,200, 4,300, it is still a bounce. It's still not like a bull return. It's just a bounce. Okay, but it's a good bounce. If you can bounce from 4,000 to 4,002, also not bad. Quite a fair bit, right? How many percent is that? Let me take a look. From here to here is about 5%. So I think it's reasonable. All right. So 4025, everything hinges here, 4025. And why I think that, it can bounce up. And if it bounce up, right, it should overcome the 4025 first. Are we clear, everybody? If it's clear, can you just type 4025? Okay, so it hit the monthly S1. It hit the monthly S1. So that's one of the confluence there, but it must overcome 4025. So can everybody just help me type this, 4025? If you can overcome this, and this is likely what will happen. All right. If you can overcome this, then I think on Monday, now today is Friday already. So if you can overcome this, if it breaks above, then one of these two things will happen. One, it comes down a little bit, then it goes up like that over the next 2 weeks. Or two, this thing just rally upwards like that. Just rally upwards like that. In 2-3 sessions, it hits the resistance. But regardless of the case, regardless of where it will bounce to, my eventual target for the next 3-4 weeks will be here. I am not becoming a bull. I am not like turning into a wow, I want to buy everything now. I am not doing that until they can overcome this area. Okay, this 4,200 zone. So you need to know this. This is something that you need to know. Despite the lines that you are seeing on the chart, I don't want to remove them because it will hassle for me to go and plot back next time, because my lines tell me certain things that I want to know. So 4025 needs to break first. Then the eventual resistance for the next, I would say the target for the next 3 weeks, till you maybe next see me, it's 4,200. And if you want to short, I know some of you are thinking that I want to short. Wow, should you still short? Please lah, not now lah. Don't short now lah. You want to short, wait for the thing to bounce back, see a reaction, and then it's like, hey, I cannot get through leh. You want to short here, it makes more sense. Your risk to reward makes a lot more sense here. It doesn't make sense like right at the bottom, you go and short, it's like, yo. So Darius, good question. How do I determine the 4025 level? Trade secret. No, just kidding. It's just technicals lah. It's just technicals. This is an area that is abyss that nobody, not many transactions are there. So it's an abyss. So it definitely is a level for us to overcome. All right. So this is on the S&P 500. Are we clear? And when I talk about this, right, can I use this as a proxy to represent the Dow Jones and the NASDAQ? The answer is yes. You just know that for Dow Jones, it is a more muted, whereas for NASDAQ, it's like more volatile than whatever that we're seeing here. The market, they are all interlinked one. Okay, so like today, is it bullish? Tommy, good question. Just give me a while, okay? So today is the market bullish. Well, looking at the market breadth, y'all don't wow. Y'all don't like, oh, what the heck is this? Okay, so this is something that I look at, like intraday internals. Today is definitely bullish because you can see the tick is up there, the trend is like below. So yeah, this is not like a short covering or anything. This is quite okay. It's quite an okay thing. Trend is down here. VIX is not exactly spiking despite the market tank. So that's one good thing lah. Overall in this year, I still think that we are quite okay. I don't think that we are getting an immediate crash. We are just learning how to price in the 2 major hikes. One already happened, one yet to happen. So today is definitely bullish. It's not a fake out thing lah. Like as the market break out to a higher high, okay, as the market just broke out, you can see that the bonds are getting pushed down as well. So that's the 30 years bond, that's the 10 years bond. So I think it's really healthy. All signs are like confluence pointing towards a bullish day. And if you look at advances decliners, right, the ratio is crazy, 4:1. So 1:1, 2:1 point something is to 1, that's okay. But 4:1 is okay. It was more bullish just now. And if you look at the volume, right, the volume is just outpacing as well. 12:1, 11:1. So there is nothing to complain about today. Today is really a bullish day. So the next game plan when Monday comes on, and thank you for staying here until 1:16 with me, okay? So the next Monday when the market opens, or at least when the Asian session begins, look at the S&P 500. look at the 4025 area, because a bullish day like this, today, everything that it tells me, it is bullish. And then what's going to happen on Monday? I want to see some follow through. If there's no follow through, I also, last week so strong. What happened to you? Why today the bull become a calf again? Become 小绵羊? So today is okay. I just want to see follow through in the form of 4025. I want to break it first, obviously. Break already. Eventual target 4,200 for the next 2 weeks, 3 weeks. Pretty much, I think, won't be too far off. I don't think we'll be too far off from what I mentioned. Okay. So far, y'all getting some entertainment? Are y'all getting some good entertainment value? If you are, can you just let me type entertainment? Looks like I can be a comedian, right? Can go and entertain y'all, right? Do a talk show on the market. Okay, so
120.
120. Okay, so let me tie up this one by answering Tommy's question. Hey, again, guys, if you find some entertainment, midnight entertainment, in fact, past midnight entertainment, just let me key in entertainment, all right? Just let me type that. So at least I know I'm on the right track. On Dow Jones 30. Okay, so for Dow Jones 30, okay, there are many lines. Pardon my lines, okay? there are many lines. I need it to clear above this area, 32,000. What is this? 32,600, some 700, 32700, 32700. Sorry, somewhere around here. This has to clear first, lah. Then I consider, lah. All right. Then I consider like okay, this is not the weakest so far. It is the least weak among the rest of the index. For the tech stocks, right? I personally would still not want to touch it that much because the market is diverse. There are actually quite a lot more stocks other than just technology. So technology, most of the stocks are still underwater. You do what you do for technology. I'm not touching it. I'm looking mostly at this two. Okay, mostly at this two. So the game plan remains the same, right? So let's just see where it goes. And for me, right, to be really like more happy about, let's say, be more how do I put it, more optimistic I at least have to clear the 4,200 level, because this is a base. All right, this show me that it came down and then it bounces up, blah blah blah. So the previous time the bears launched their attack, it was from this base of 4,200. So if you launch your attack somewhere here and then the market tanked down, the next time people threaten your attack, right? What will you do? You will defend it, right? So this will be a very glorious defending area for me to know that how the bulls and bears fight when they are in this area lah. So if they can overcome, then yeah, I get more, conviction. But right now it's like, yeah, it's a bounce. So depending on your game plan, bounce to where? If your game plan is like a few days one, then bounce up there, you target off there, then good lah. But if your game plan is longer one, don't buy it now lah. Wait for this to clear first. Okay, so 2 to 3 weeks, I think more or less this will happen. Then what happens after that is all here already. And then we'll be running close towards June's FOMC, which let's see whether we will get a 75 basis point increase. If we do, I think this is already pricing in the 75 basis point. Let's see where it goes. Okay, so in Chai, what other potential trades I'm looking at the moment? In Chai, it's all in the list that I sent out to you all. In Chai is one of my students, so it's on the list that I'm sending out to them every week lah. So where are the strong stocks? I know some of you are very tempted to look at oil, to look at, I think, utilities, but oil and utilities, they are a little bit overdrawn for quite a while already. If you look at this, right, looking at where the strong sectors are, this utilities is like, okay, coming down, still holding properly, but it's not bouncing. Let's see, the market comes down like this. Energy, it is strong, but tread carefully. Don't expect energy to fly to the moon, right? Don't expect that, because when the next rotation happen, and it will, because if the overweightage on energy is too much among the hedge funds, amongst the institution, they will rotate out just to lessen their impact should it come down, right? Basic materials look like something that has not moved, like that I found a base. This what do you call that? Staples are quite interesting as well. Staples are quite interesting. High interest rate will not really favor real estate. So fundamentally, if you're looking at the rest of the year outlook, I don't think this is a favorite play. And yeah, I think healthcare is doing okay. Staples is doing okay. Materials is doing okay. All these are defensive lah. All these are defensive stocks. So defensive sector. So go and take a look at these lah. But I just want to warn you regarding energy and utility because they have been going up for a while. It is just a matter of time before the rotation happens. So if you want to trade this kind, can, right? No problem. Just have a game plan, know where to exit and exit it fast. Don't like, oh, I expect to fly to the moon, fly to the Mars, fly to Jupiter. You go fly kite, I think easier. Okay. So Darius, if the interest rate would counter next year recession, stock fall due to the rates increase in negative QE, fall due to the fear of recession, and then fall during the recession, only rise after the recession. Wow, that's damn cheap. Okay. The market will always do a action first before the actual economy turns. How often? 6 to 12 months. Usually that's what happens. So don't be, how do I say? Don't, if it confuses you, don't read too deep into it. Focus more on the price level. At least one thing, take away one thing. If there's one thing that I want you to take away tonight, watch for the follow through. Tonight is strong for sure. I already shown you on the, my own monitoring. Tonight is definitely strong, but I just want to see whether there is any follow through. If there's follow through above 4025, good. Then over the next 2 weeks, I think the target is about 4,002. So somewhere there. Okay, so can good done And then Alex gonna chase me. Alex is like, "Walao, kin faster lah, what piang?"
Yeah, it's getting late already, but I think Jay actually share a lot of content, a lot of value to you guys. Okay, so if you get some entertainment value, knowledge from Jay, right? Just type yes in the comments so then we can appreciate him. So next time it's easier for me to invite him back again. Okay, so if you think that he's bringing value, just type yes in the comment. I think not too bad at this point in time. About 125. We still have about 300 plus people in the room. Okay, and before I want to end this session, right? Just want to share with you one last thing. Okay, even though at the start, okay, I think that the market has bottomed. Although I think has bottomed, but when the market showed me that it is going to come down again, then my opinion will change again because I am primarily a kind of swing trader, so I can react fast. Okay, don't quote me say, hey, Alex say bottom already, then you say or you go up for the rest of the year, which I think it could for now. But along the way, I see the price action. For example, this is a daily time frame. When price hits certain levels at the CPR, the cloud, whatever it is, there is some overhead resistance, right? And when price is really starting to come down again, then my opinion will change and looking at other internals. So don't quote my word, even though I think the market has bottomed, but you do have to agree with me. We can see how the market move in 2 to 3 months time. Okay, in 2 to 3 months time. So, but as always, as I said, I think it's last week. Okay, based on Stan Weinstein analysis, right? If you just do a very simple one, we are in fact still in an overall downtrend. Okay, so if you really want to have a confirmation, at least wait for price to be at least above the 150, as in the 30-week EMA, or at least above the cloud and some of the other CPR thing, which I always mention to you. Okay, but if you're really kind of bottom picking, then do it with some risk management in place. Okay, have a stop in case I'm wrong, you are wrong. At least we can get out. Okay, don't have a fixated mindset that hey, this is definitely important. When we are proven wrong, then we have to change our analysis again. Yeah, okay. All right. So I think, I think this is the longest Friday Facebook Live that I've done. It's around 1:30 already. So, but anyway, Okay, so yeah, I can see quite a number of yes, you know, and such. Okay, so thank you, Jay. Once again, you know, always happy to have you on our session and also at our submit. So yeah, so today as usual is Friday, so Saturday, Sunday, and it's a long weekend ahead. So I wish you guys have a long weekend, have fun. Okay, and any last word for the crowd, Jay?
Trade safe, have fun, and let's see whether the levels do they play out as what we have discussed. I hope so.
Yeah, so I think short term wise, definitely a bounce. I think so. Not definitely. 90% chance, I think there's a chance that it will bounce. But whether it is already a bottom, you know, I think so lah. But I know Jay might not think so. But it doesn't matter. Okay, we shall see. Okay, in 1 month's time, like what I say in the Telegram chat, see how it goes. Okay. So thank you so much for your time. So have fun. You know, have a good long weekend, and we'll see you again soon. Okay.
All
Good
right.
night,
Thank you,
Manan,
everybody.
and bye bye.
Bye bye.